Hi guys, please like, share and subscribe. And if you want full course for any actuarial subject, visit theactuarialguy.com or WhatsApp on this number. Thank you.
Okay. So I will just start off with a brief introduction and then we'll go over the questions. And I'd like to keep it very casual and sort of freewheeling. You can choose to talk about anything that you want to. So that's obviously a part of it. And yeah, not very formal, right? Okay. Hello and welcome, guys. So today, for the second episode of the Actuarial podcast, I have with me Mr. Sumit Ramani, who is a fellow of both Institute and Faculty of Actuaries and Institute of Actuaries of India. He is a non-traditional consulting actuary, and he runs his own consulting firm, Actuaria Consultants. He has been with very big names in the past, including Swiss Re and Kotak Life, and right now he has been doing well on his entrepreneurial journey. He has another startup called as Protect Me Well, which is an online platform, I suppose, which helps people choose like the right sort of insurance coverage that they should take and the sort of policies that they need to take. Also, he's the chief actuary at Fidentia X. So Sumit is one guy who is doing a lot of cool work in this area, and that's actually he's one of those guys who's really inspiring, like for a lot of us in the actuarial domain. For someone to just step out of the traditional role is actually rare still in the profession, and that's actually really admirable for me. And I had spoken to Sumit about 4 years back. I did a very similar session, which is still on my YouTube channel, and it's the video which has gotten the most number of views. It has 9,000 views now.
Wow.
So so I thought it would be a really good idea to speak to Sumit again, and just see that how things have evolved and how he feels about the profession and things in general now, right? So Sumit, so how has the journey been since we last spoke? Like, it's been four years.
Since we last spoke, I think things have changed a lot, and I've learned a lot, gained a lot, both in terms of knowledge, in terms of visibility, and there has been obviously a fair amount of financial benefits over a period of time because of being on my own and working with clients across the globe. When we spoke, I had just started, I think, it was a month since I had started on my own, and I was already working on a client project then. Since then, spoken at several conferences, worked with clients pretty much across the globe. So I can now boast of clients in 5 continents and have over 30 odd clients I have worked with. Not all of them I'm working with them currently, but I've worked about with 30 odd clients. And all of it has been super exciting work, right? I mean, the beauty of everything that I've done is, while where I've applied my skills are fairly non-traditional areas, but but the good part is that the skills that I learned over doing the regular traditional job at insurer and reinsurer was being applied in different settings. So in terms of skills, I kind of utilized what I already knew, but applied in a new setting. And of course, now I'm also pursuing a fairly rigorous course on machine learning, wherein I've already spent good 6 months, and also working on an assignment wherein I'm using machine learning techniques to estimate the depreciated value of car based on certain inputs. So fairly exciting. The team is also growing. Now, while I worked with a pool of resources over a period of throughout last 3-4 years, I've also identified someone who's going to work with me full time. Fairly senior resource, nearly qualified, I would say. That has been on the consulting side. and equally, as you mentioned, on Protect Me Well, which is a comprehensive insurance need analyzer, is what we launched last year, has been generating fair amount of interest, and now we are in a situation to launch it for US as well.
Okay, so far you've just been operating in India with that, is it?
Yeah, so it was the need analysis or the financial profiling of an individual is very specific to where he or she lives, right? Because what he earns, the rate at which he earns, the inflation, the interest rate, all are a function of where of the geography, right? But the way we design the algorithm doesn't need to be changed. It is a very comprehensive and flexible algorithm. But let's say when we are moving to US, all we need to do is add parameters which are specific to US, which means a lot of research but no coding.
So you have a certain proof of concept now, and then now you can scale up to newer markets.
So newer markets, which would only mean doing a lot of research to be able to find out those parameters which are appropriate for the market, doing testing whether the results make sense or not, but no for the coding, which is the beauty of what you've done.
Right.
Equally, we've done strategic collaborations with a chatbot company. So now you can take the entire Protect Me Well journey while talking to a chatbot, either through text or through voice.
Okay.
Also,
that's very interesting.
Yeah. Also partnered with another strategic partner who helps insurance brokers sell all policies online very quickly. So they have integrated APIs with insurer, and whenever a broker wants to sell policies online, they can use their APIs or wrapper around them, right? Now, Protect Me Well sits in their API stack.
Okay,
so if a broker
essentially your services can be accessed via the insurance broker's website, right?
If they wish, they're working.
You do the advisory and sort of like consulting part of it for the client, and then they are the ones who are offering the options, right?
Yeah. So this is really the first step of buying insurance, right? To know what is that you need.
Right.
And once you've figured out, the remaining part is, of course, to buy what you need, right? So we are really touching or adding value in the very first step of insurance buying journey.
So like 4 years ago, I don't know if you remember this or not. I had asked you a question that whether actuaries' work will be replaced by machines and artificial intelligence or not. But then now the kind of product you have created, you have sort of automated the work of an insurance agent, right? In a lot of ways.
I mean, partly yes. Yeah.
Right. So
and that would continue to happen, right? I mean, every job that can be automated will get automated. Every job wherein data could add a lot of value and which requires huge calculations or running several rules in one go will get automated. So and we'll probably talk about it during the podcast. But slowly and gradually, things would start getting automated, and only way to stay in the game is up your game, right? Move up the ladder chain so that the repetitive task that you're doing is done by someone else, which frees up your time to upskill and do something more meaningful.
Right. But let me just pose a further question on that. So the role of an insurance agent traditionally, as we have seen it in India, it's a very sort of personalized role, right? The client maintains a very personal relationship with the insurance agent, and they keep in regular touch, right? But with a tech like yours, how are you able to compensate for that? Because I think at some level that would be a challenge, right? That sort of engagement.
Yeah. So in India or pretty much across the globe, insurance would need to have a human touch. And would by and large be sold through agents or human beings. Yes, the more sophisticated ones who don't want to talk to human beings would do it online, but there would be a chunk of people, a fair majority of people who would buy through an agent, right?
So this
what we're doing is
enabling.
No, I'm saying what we're doing is enabling everyone to identify their insurance needs, right? Whether you choose to buy yourself or through an agent is still quite open to you.
Right.
But what you need to know is whether I need a term insurance of 1 crore or 2 crore or 5 crores. when I retire, should I have a retirement corpus of 5 crores, 10 crores, 15 crores? Do I need a medical insurance of 5 lakhs or 10 lakhs or 15 lakhs? Given I have a family of certain size, I earn some certain amount. And what should be the size of my, let's say, critical illness cover, right? If I ask people now, they won't even, I mean, they might have an answer, but that may or may not be a scientifically backed answer.
Right.
What we're doing is enabling people to identify their needs and then letting them decide how they wish to buy.
Right. So you're bringing in a lot of expertise in terms of what you've learned as an actuary in order to how people should personally evaluate their insurance requirements. Right.
Exactly.
That's actually great. That's great. So, just to get the first question. So, you've worked in a couple of different settings, right? You've worked in a KPO sort of setup with Swiss Re. You've worked in Kotak Life, where it was a core insurance company, and now you're an entrepreneur for almost 4 years. So walk me through how does the experience differ, and like what are the different challenges which come in each of the sort of setup, and like how does the experience differ?
Yeah, I mean, the experience is certainly different. And if I look at it now, and of course, the challenges are different. So when I was with a direct insurer, everything that I did was fairly regulatory, right? So everything that I did would go through so I was in the pricing team. So every product that is before it is launched, it is approved by a regulator, right? So a lot of it that you do is it was regulatory in nature in that sense, right? So it required a different type of rigor and also a different, I would say, let me put it, a very different skill set in terms of being able to be 100% right or near 100% right, which is what you expect from actuaries in any way. But what it also means that if you want to be 100% right, there's little room in terms of what you could do new. Let's say if I were to say I am pricing a product which is based on, let's say, credit score of the individual. I do not know your health conditions, but I know your credit score. Can I do it without taking a risk, right? Without taking a risk that, okay, this could go wrong, my algorithms could fail, my algorithms could generate value which is not reliable and different from reality. But am I willing to take that risk? While while quoting this example, this is already being done in India and overseas, right? But before it could get to a point where someone thought about it and did it, it took several years.
Right? So what you're telling me is that the scope of innovation is fairly limited in that area.
I would say it is not limited. The entire journey is very slow. From the point of being ideating and to execute it, it takes a while, and it is for a reason, right? I'm not trying to say that this is not how it should be done, because when you and I buy policies from an insurance companies, we are placing a lot of trust on them. I mean, there's no point me buying a term insurance if the claims cannot be paid, right, when the time comes. And that could only happen when insurance companies work in a very structured, neat way, wherein they ensure that the models are fairly accurate. They know details to the last level of, they know information to the last level of detail. They make the right provisions and not play around with it, right? And not being innovative with what you provision. So yeah, so it has to be run in a certain way, and that's essentially how it would be for next several years. There would be innovations, but may not necessarily be in how you price product, but maybe how you onboard a customer, how you underwrite, how you pay the claims, and maybe start using new parameters like you already see in vehicle telematics, right? So we're using new parameters, but vehicle telematics is something which we're talking since last 20 odd years already, right? So it took a while before, and it's still not mainstream.
Right, sure. So you told me that you've worked in like 5 continents, right? So how is the experience
while still sitting in India?
While still sitting in India, of course, but you're getting work from a lot of continents,
yeah.
and then you're pricing products which are going to be implemented in different locations, right? So the quality of like data, that is one that is something I want to address this from that perspective, that in India, the quality of data that you must get, how does it differ from that you have abroad? And then in general, the kind of work that you have and the kind of products that you work with, is it very different in India and the developed world?
Yeah. So while I worked in clients in 5 continents, my work in the role of consultant has been fairly non-regulatory in nature. So there have been very few instances where I would have done which is closer to pricing a product and not really pricing it. So what I've done is fairly non-regulatory in nature, just to clarify that bit. To address your point around data, right? So let me take an example. While there are good examples in my consulting role assignments, the very good examples are also what we see in Protect Me Well, right? So when we, let's say, one of the things that we try and find out or estimate as part of Protect Me Well is how much you spend, right? I mean, that determines how much, for example, in context of term insurance, your expenses now and future is what you need to be covered for, right? Basically, the expenses of your expenses, your family's expenses, and outstanding loans is what you should be covered for, right? And there's no easy way to identify it. But in a US setting, I can do it at a pin code level. There's tons of information where you tell me what is your pin code, and with fair degree of accuracy, I can tell you what would be the size of your home, would be your expenses your expenses look like under various heads. In India, things change from one street to another, right? And that's fair, right? Nothing wrong in it, but you do not have easy way to find it. For example, the stark example is Bandra West is very different from Bandra East, right? But you don't have reliable information to be able to tell how different Bandra West is different from Bandra East, or quantify it. Something like that is available in US market.
Right.
So so when you work with data which is fairly detailed, you're a lot more confident about what you're doing, and hence your results are fairly reliable. Equally, right? I mean, when I was with Switch Re, so in Indian setting, when you're pricing a life insurance product, the rating factors that you use is largely, right, broadly age, gender, and smoker status, right? When I was at Swiss Re, I was reviewing a model, a model which is used for pricing term insurance in US. It had 25 parameters.
Okay. Right.
So
and
because
that
you have
changes the level of complication and the accuracy manifold. Correct.
Yeah. It also means that, I mean, your model becomes a lot more complex, but it also means that you have data at a very, very granular level. You could price things based on, I mean, social status is one of the very important factor, right? It would be factored in India as well, but we do not have that granular data. And I mean, the point is we'll get there. It will take a few years to be able to get there.
Right. So while we are talking about India in particular, so if you look at the Indian life insurance market, which is something I think you've worked for a while in, there is a big, a government company, a mammoth in terms of LIC, which controls a huge chunk of the market, and a very small portion of the market is left to the private players. Like in India, until at least 5-10 years ago, and even now, people use the word LIC when they want to refer to life insurance. They're like, "Aapne LIC le rakhi hai kya?" Matlab, that sort of a phrase works, right? That's synonymous. So with that sort of a big player with such deep pockets in the market and such a huge reach, where do you see the Indian life insurance domain going, and also how does the presence of such a big PSU affect the market, in your opinion?
I mean, regardless of the so many players that we already have, right? India is still very, very underpenetrated. So what you could do is a lot more than what has already been done. So in my mind, there's a lot of scope of uh, lot of scope. There's a lot that can be done in life insurance setting. There's a lot that needs to be done in increasing insurance penetration, right? So while we're talking about like penetration of what sub 10%, essentially. I mean, I'm not updated with recent numbers, but it's certainly sub 10. And in most developed markets, it will be 50, 60 odd percent, right? So there's a lot that needs to be done. The advantage of LIC is that people started knowing about insurance when the LIC started, right? And when the new players came in, people knew what insurance is. I mean, had heard the term what insurance is, right? So in a way, the presence of LIC has only helped. That's how I see it.
Right, right.
Of course, I mean, there's various factors that come into play, especially when you go to tier 2 or tier 3 cities. But presence of insurance players like LIC has certainly helped the market and would continue to help.
Right.
And there would still be room for private players to add value in the country in terms of
because
increasing
much of the
decreasing the
market
protection
is
gap.
still not covered, right? Correct.
Covered, yeah.
So how has COVID-19 affected you in terms of your work and your life? Has there been much impact?
Yeah. I mean, in terms of my work, there hasn't been much impact. My hands were full throughout. So it did not impact me. And I was lucky, I must say. But what I also did, two important things that I did. I enhanced my skill around asynchronous communication. So since I work with people, with clients across the globe, I have a pool of resources which are based wherever, and they are freelancers themselves, right? So I don't know when they would be available. So the traditional way would have been to pick up a phone and reach out to them and speak to them, right? But chances are they are busy with something else. So how do you ensure that you continue to rely on resources while still not rely on real-time communication? Right? How do you send uh, more complete messages over Slack so that you don't get a follow-up question in response, but you get an answer that you're looking for? Right, so that's one skill I've been trying to up my game there. So asynchronous communication is where I've been trying to which improved over a period of time. So if I were to, let's say, send a message, I'll just send a message. I now uh, consciously ask myself, do I need to make a call or can I do something asynchronously? If I were to explain something in detail, I'll record a video and send it over. If I were to show something in a particular web page, let's say, I would just take a screenshot, identify that particular page, write text over it, and send it over. And this is exactly how entire Protect Me Well was built. It was built during COVID times. So a part of my team, I haven't even met even now. Okay. But it also means that demonstrates that we could do something remotely and something which is fairly credible, reliable, and as robust as Protect Me Well is. Right. In terms of personally, it also, I mean, there was during the time I also realized that what I've been doing throughout since I started on my own has been fairly location agnostic. I have a very few clients in India, and if they are mostly based out of Mumbai, and I was based out of Bangalore, right? So I was anyways not physically present to meet them, and rest of my clients were spread across globally, so I did not meet them on a regular basis, if at all, if I met them. And Protect Me Well was entirely done remotely, right? So that made me wonder: is there any reason why I should still be living in Bangalore? Away from my family, my parents, and also spending a fair amount on things that I spend on, right? So after careful consideration, doing a pilot of living for 100 days in Bhilai, I moved to Bhilai 2 months ago. So now I am based out of Bhilai, working from here. It has not changed anything that I've been doing, and until things open up, right, I will be here. And when things open up, I'll travel more frequently, but this is now my base location. So that's a huge impact
great.
of COVID.
That's interesting. Like being able to work out of a tier 2 or tier 3 city, that has actually become possible, and we have realized that it is doable. I mean, without the pandemic and without the lockdowns, we would have probably never even thought about it. Right? That thought wouldn't have come in.
Yeah. So in my mind, it was always there, but it was also the perception around who I deal with, right? So if now people are open to the idea for Protect Me Well, nobody has told me let's meet and have a discussion, right? When I was and in the consulting setting, people said, okay, Delhi aa jao, baat kar lete hain. So now people are open to the idea of doing a video call and having a critical conversations or important conversations over video call, right? So the perception around across the globe has changed, which made this decision a lot more easier. This also means that now my monthly expenses are taken care by my financial assets, which gives me a lot more room to experiment. So now I'm in a position to hire someone who is full-time, who is fairly senior, so that I could do more, because I'm no longer worried about my expenses. They're already taken care of.
Right. So that's on the personal and the professional side. But how do you think insurance, life and health insurance, has been impacted by the pandemic? Because I believe that because of the coming in of the pandemic and the medical costs that would have been disproportionately affected because of this, the life insurance costs that would have been disproportionately affected, are they being taken into account now? And like going in the future, pandemics look like a very real risk in the heads of human beings now. So has that changed things? Did you see some impact?
So I think in the first wave, life insurance wasn't really impacted because there weren't many deaths, right? And health insurance had a interesting impact wherein OPDs were pretty much closed. Nobody visited hospital for small little things. People who could delay their surgeries delayed it. So I think the claims were also very less. The only claims that health insurance companies experienced were largely around COVID, and those weren't much, at least the first phase. In the second wave, the deaths have increased, and that has certainly impacted life insurance companies very, very directly. Now, if you see, they've also the insurance, the premiums have gone up, not just because of COVID, but it was, in my mind, long due. Term insurance rates were very, very competitive. So it was long due. COVID just accelerated it. Second, now they also, I read in one of the policy contracts that, or maybe I'm not 100% right, but I will have to do a fact check. You're required to take vaccine before an insurance company would be willing to offer you term insurance. 4 doses of vaccine unless you're offered a term insurance. So that's the level of impact COVID has had on life insurance side. On health insurance side, now you see all sorts of claims, and the health insurance claims would have also increased. I'm again not very close to it. So the underwriting guidelines would certainly change. Like the vaccination would become part of the underwriting guideline. There might just be exclusions or waiting period for those who were diagnosed with COVID in past. And if there are already products which are specific to COVID, and again, this is something one will have to do a fact check on. Not up until last month, not many insurers were willing to renew Corona Kavach and Rakshak.
Right,
because there is a very, very direct risk here in terms of someone buying it and claiming it in the following week or in 2 weeks, because pretty much so everyone I spoke to had someone or else in the family who was impacted because of COVID, right? So that was a level of impact.
Right.
And the last bit really, when the first wave started, I jacked up my life insurance cover and medical cover around at that time, and that's where Protect Me Well also came in handy. I said, okay, now the Protect Me Well is ready. Let me do my analysis. And there was a huge gap, on the term insurance side, there was a huge gap which I already knew. So I jacked it up just so that if let's say if I'm not around, my family is covered. And this is exactly why people started seeing value in protecting well as well, because people just did not know what is the right size of the cover.
Right. Right. So let me, since you are in this business and the kind of work that Protect Me Well is doing, let me address a separate question here. So what I've personally seen in India is that a lot of people look at life insurance as an investment product and not as a protection product, right? Whenever you see the advertisements and the commercials of life insurance, they're always claiming the rates of returns, and endowment assurance sells much more than term assurance, as I think that's my perception of it, right? So like, do you think that attitude is slowly changing, and how has that shaped the insurance business in the country over the past?
Yes. Yeah. So I think the attitude is changing slightly, especially amongst the more financial savvy people. Uh, Quite a few people now I talk to aren't keen on buying endowment products. They think they are better off buying a term insurance and investing in mutual funds or equity or fixed deposit directly. So there has been an increase in awareness, but I think there's still a lot of business for insurance companies comes through a savings product. But in my mind, it has gradually shifted over in past. Now there is a fair amount of focus on term insurance and annuity products. Equally, and this will continue to increase. If you look at some of the listed companies and read their annual reports, they are very clear about increasing their focus around protection focused insurance.
Right, right. So the next thing I would want to talk about is Fidentia X and blockchain-based tradable insurance, right? So that sounded like a very interesting and appealing concept to me. So please tell me, like, what are you guys exactly doing? And you are you one of the founders there, or you're just like a consultant?
Yeah. So Fidentia started around 2017, and it's I think they're no longer very active in the operations, and my arrangement with them also stopped year and a half ago, because they were in my head. I mean, the idea is nice and still novel and makes sense to me. uh, the team struggled a lot because of not being able to find right blockchain technology partners, because and that it was early 2017, right, when blockchain, when people were still trying to figure out what blockchain is.
Right. It was
And
fairly
being able to
novice
find,
at that point.
yeah. So trying identifying partners who could develop a solution was difficult, and a lot of money was spent into technology development, but the output wasn't quite delivered by the partners, and hence the team and the project suffered. So it's still it is on, but in a very dormant state.
Right. But then let's just talk about the product itself. How how much potential do you see in tradable insurance platforms, and what value does blockchain add to it?
Yes. So let's also then briefly understand what tradable life insurance is, right? This is primarily for products which have investment components like endowment, largely endowment products. What really happens, right? What one is really trying to do is squeeze a value or extract a value from the surrender value, or the difference in surrender values that an insurance company offers, and what a new buyer of the insurance product or a buyer in the secondary market could offer. So in an endowment setting, let's say if you buy an endowment product for 10 years duration and choose to discontinue it, surrender it, let's say after 3 years. In most cases, and pretty much across the globe, what you get is about 30% of the premiums that you paid over 3 years, which is roughly one premium out of 10 premiums, right? But let's say if someone comes in, what he's gonna get is and every endowment product that you see, you are definitely going to, the maturity value is definitely going to be higher than the total premiums. So IRR is certainly positive, right? When you sell it after 3 years, you pay 3 premiums and get 1 back. So IRR is negative. So difference between this -2, 3 odd percent IRR to 3-4% plus 3-4% IRR is where you could play around, right? So a new person comes in, okay, says that, okay, insurance company is paying you one equivalent of 1 premium. Let me pay you 1.2 premium. You still make money. Since I pay 1.2 premium now and next 7 premiums for next 7 years, and I get more than 10 premiums, I also make money, right? Why an insurance company can't do this? Because insurance companies end up spending a lot on acquisition. So they pay commissions in the first year, they have administration charges. So they can't return the entire premium because some part of it is already spent, and which insurance company was hoping to recover over 10 years through investment, right? But since you terminated the contract early, they can only give you what they can afford to give you. Right. So there's clear meat, clear juice line there, and makes sense to extract it.
Sure.
Right. What blockchain does is, let's say if I was the original buyer of the insurance policy and I decided to not continue it, and I want to now sell it to someone. How do I find that someone? Right? How do I figure out that this someone is going to, if I assign my contract to him, which means he becomes the final beneficiary of this product, also pays a premium, becomes a beneficiary, I would get my 1.2 premium back, right? So because there are 2 steps. I first assign and then get a premium, or I first get premium and then assign. So either party could default. What blockchain does is, okay, something called smart contract, where you say, okay, I assign, and this would be released to you only when you give me 1.2 premiums. So there is an automatic contract that is signed, which is triggered by me assigning contract to you and you paying me 1.2 premium. If you default, you don't get the contract. If I default, I don't get the money. And I don't need to rely on a third party to do it, because that is how blockchain is structured.
So it's self-enforcing in some way.
Right? Yeah, it's equally right. I mean, let's take example of which is more relatable, right? Flight delay insurance. What it says is you buy a policy before you board the flight, 2 hours, 3 hours, 10 hours, a day before. If your flight get delays by, let's say, half an hour or 2 hours, you get money back. You get your, the claim is automatically triggered, you get X amount of money, right? This is something which can happen without blockchain as well. I mean, there's no reason why this can't happen without blockchain, right? Insurance company could figure out that you bought a policy, the flight got delayed, and initiate a claim. They could do it themselves without having to do it over blockchain. And there are companies who have done it without blockchain. But what blockchain implies is that once I've bought the contract, there's nobody could play around with it. There's nobody who could change it. And Oracle, which is a third-party software, which would run and see, okay, if the flight got delayed, if it got delayed, it would trigger. The claim amount is already in escrow, and it would come to me if there is a claim. Would come to insurance, go to insurance company if there is no claim. As simple as that. Once the contract is written, you can't change it.
Right.
And hence it brings in trust even within parties who you can't trust otherwise.
Okay. Which is fine, but let me ask a couple of follow-up questions on this.
Yeah.
So first of all, for example, I'm doing the same thing for life insurance. So does the cover stay for the first life itself, or like the cover gets transferred? The cover is for the first life itself. It's only the beneficiary which changes, right?
Yeah, the cover still is with the first life, and that's and it is a problem in itself, because once how do you know that the original life insured has died, right? Because he has no interest in telling you, and that's pretty much a problem across the globe.
Right.
How people get around is
also one more thing there isn't any insurable interest, right? Which is a primary condition for life insurance, isn't it? Like if I buy it from a stranger, I don't have an insurable interest. Like I'm just betting on a stranger's life somehow.
Yes, you are. But in several, and that's where the conflict comes in, right? For example, it is not allowed in India. It is allowed in Singapore. It is allowed in US. So in US, their Supreme Court passed a judgment that after the policy has been bought, it has been bought from the insurance companies. It becomes more like an asset which could be sold, and that's where insurable interest doesn't come in picture. It becomes like you bought a car and you want to sell it because there's a meat in it.
Right. Right.
So yeah, I mean, and it could get tricky, right? So let's say if you buy my policy, kill me, you get all the money, or vice versa.
And it gets much more complicated in terms of a term insurance, right? Because then you're exactly wishing for that person to die, or otherwise you lose your money.
Right. So so generally term insurance are not tradable because there isn't any surrender value. So there's no reason why someone would sell term insurance.
Right.
Trade term insurance. It's only with the savings product.
What I've read on this is for a lot of critically ill people, there are some contracts called as Viticals, which are sold in the US. And they are essentially term assurance or sort of whole life assurance contracts, right? And what they would do is like someone has been diagnosed with cancer and they have their life insurance policy. So now they want to live a comfortable life, right? For the remaining time they have. So they would transfer their policy and they would receive a substantial amount of money. And whenever they die, the investor who has invested in their life receives the money. But then eventually what happened was that treatments evolved over time. Like these policies were very, very popular in the 90s. But then, it was for AIDS. It was sold a lot.
Exactly.
But then for AIDS, the treatment evolved so much that these people were not dying. And then the investors were filing suits in the courts that, my agent promised me this much of a return, but I got nothing. I, in fact, lost money because the person survived. So like some moral conflict there.
Yeah, there is. But then let's also look at from other perspective, right? So someone who is terminally ill needs money right now to be treated, right? He may not be very interested in getting money after he has died, especially if the family is self-sufficient, right? And hence he has a reason to sell it off to someone, utilize that money to treat himself.
There's obviously a gray area there, right?
Yeah.
Okay. So that's actually very innovative, like the kind of work you're doing. Is my video off now? I think
yes,
I have some
issue.
I think I have some issue with my camera, so I'll keep it off anyway. Okay. So okay, so we have discussed a whole lot of things. Let me just move on to something else. So in terms of the Indian actuarial profession, right? So you have been observing it for quite a while now, right? How do you think it has evolved since we last spoke? So the last time we spoke, we discussed that there were a lot of freshers and the number of jobs were quite limited. Freshers had a lot of exams. Do you think that has changed over the last 3-4 years? Do you think it has gotten better?
Yeah, I am not very sure if I'm close enough to comment on it, but I can talk about a few things that have happened. I think the challenge around oversupply, especially amongst young actuarial talent, is now recognized, and there has been some action taken by the institute as well, right? So there is now a working party which is working on wider areas. There's a working party which was focused on introducing actuaries to banking domain, and equally there's something that I'm working with institute to see how actuaries could become part of mainstream Insurtech revolution, right? So the point, so what has changed? There has been acknowledgement. There has been some actions taken. Whether we see results or not, I'm not the best person to comment it. But would we see something in future? The answer is yes.
Okay. And how do you think the profession in general has changed? Do you see any like evolvement in the kind of work we do? Do you think more people are now working in the non-traditional areas, including Insurtech, in finance and banking?
Yeah, I think the profession has been growing in many ways. So both in terms of counts, the quality, the type of work we do. And if we talk about specifically about Insurtech, which is where my interest lies, there are at least 3 or 4 actuaries who are now Insurtech co-founders. So there has been fair amount of increase in terms of diversification in terms of type of work we do, the quality of work we do as well. So uh, since I've been working with uh, Indian actuarial professionals as well, I see a fair amount of change in terms of the quality of work that has changed over a period of time as well. So yeah, that's the, and equally on the regulatory side as well, right? Regulator launched Sandbox, and there has been several. There was a lot of interest among insurers and insurtech to test their product in the sandbox. So uh, in my head, we are only going north. We have only gone north in last 3 4 years.
Right. And like the insurtech space itself, you think it has grown a fair bit in the last 3 4
Yeah,
years?
yeah, yeah, yeah. Yeah, there's also an organization called India Insurtech Association, and I'm part of their executive committee, wherein I'm trying to see how actuaries could become part of Insurtech revolution, as I said. And in the same capacity, I'm working with IAI to see how IAI and Institute of and India Insurtech Association could collaborate as well. But that's really at the early stages, and I can't divulge a lot, and I can't promise a lot.
Right, but that sounds really promising, and it's really good to see that there are people like you who are being the torch bearers of sort of the insurtech revolution for actuaries. Because if you see till 2016-17 even, the kind of insurtech startups that came in India initially were mostly on the selling side and the brokerage side of it, right? So they
Yeah,
were
yeah,
only using tech to sell insurance online. They were mostly aggregators.
yeah,
But then,
yeah.
do you think now more and more companies, insurtech startups are coming in, which are doing more than just using tech platforms to sell insurance? Maybe on the
Yeah,
pricing side, maybe on the like the way the business is done.
yeah. Quite a few, I think. So there has been innovation on the underwriting side. There has been a lot of innovation on claims side as well. For example, I work with Insurtech in India now. I've been working with them for like a year and a half now, and they've been trying to. They've developed a state of the art product wherein they they standardize all the medical information that is submitted as part of claims, and they have thousands of rules that are already written in literature which they have now coded, which when passed through give you a fair indication of how much claim should be processed, how much amount, what part of it doesn't look like a genuine claim, and what part of it is certainly a fraudulent claim. So essentially, the journey is you submit your claim documents, they standardize it, convert everything into, let's say, ICD-10 codings, run rules. Now that entire information is standardized, you could run rules which are both standard rules and also run machine learning over and above it to identify patterns, and then tell uh, the claims officer or the claims team what amount should be paid, equally whether this looks like a fraud claim or not.
Right. That sounds great. So one thing I also wanted to ask you, while I was going through some of your videos and stuff that you had written about on LinkedIn, you had talked about how you helped a gaming company design their betting engine using
Yeah.
actuarial knowledge and skills. So what was that about? Please tell us about
Yeah,
that.
so there's a fair. I mean, in the last GCA which happened, I talked about them in great length. So if you wish to get into details, you could go there. But briefly here, I can talk about what I did for them. So one of the key things that I did for them was design their racing algorithm. So these are virtual horses. They can't run on their own. They have to run based on an algorithm, right? And there are tons of rules around what is the type of horse, what is the bloodline, what is the genotype, essentially telling indicators which will tell what is the quality of this horse as compared to others, right? So simplistically putting, a horse which is of a very good quality is more likely to win than horses which are not of as good a quality, right? But the horses which aren't as good in terms of quality could still win. So how do you design an algorithm which factors in the what we just said and come up with an algorithm wherein the race looks real and exciting? So that's one thing that I did. And these are again on blockchain technology. What I'm also now doing for them is doing their tokenomics, which means modeling how their new crypto tokens would be circulated, would be shared, would be utilized in the ecosystem.
Okay, that sounds really cool. Okay.
Yeah, and I mean, this is not trying to boast here, right? So when we started talking about tokenomics, I was very honest about that. I haven't done anything like this in past, right? So, and they said, okay, you know math. Since you have bought few horses, you have skin in the game, and honestly, nobody has got it right in the past. So we since we know you, we would want to work with you and not with anyone else on something like this. So yeah, that's really talks about a lot in terms of personal branding, which everyone, whether actuary or not, should focus on.
Right. So apart from your obviously your skills and the technical side of your work, it's very important to build relationships and to like inspire trust so that business comes to you. Right.
To show up, to deliver, to be available. I mean, and yeah, basically be responsible.
Right. So I mean, I have mostly run out of questions now. So just one last thing that I would want you to talk about is like where do you see the profession going forward? And again, the same question that I asked you the last time at the end. What would be your advice to young actuarial aspirants who are just entering the profession or have passed a couple of papers and are now looking for jobs?
Yeah, so I would say develop skills and not just skills that you learn through exams. I think Python is more like a Python or R is more like mandatory. Machine learning is something which one should explore, understand, get a feel for it, and if you can code, nothing like it. Because in my head, that's going to be minimum expectation in next 2, 3, 4 years. Right? So every actually would be required to do coding. And if not do actual coding, understand what is the possibility with machine learning, what is that you could do with Python in general, right? And yeah, I know getting first job is difficult. I had my fair bit of challenges, but what could really help is develop skills, talk about it either through LinkedIn, write a Medium post, and if you're doing something on machine learning, aspire to get your articles published in towards data science, and that would increase your chances of getting your first job. And that's where I think a fresh journey would start. I'm not saying that the learning should stop there, but that gives you that gives you platform to do more and more important and exciting things.
Right. Okay, Sumit, thank you. Thanks for your time.
Yeah.
And I think it's been a great learning session. And I personally have, learned a lot. And I'm sure the people who will watch this video will learn a lot from your experiences. It's always nice talking to you and to hear about so much new, cool, cutting edge work that is happening at the forefront of innovation in actuarial science and insurance. So yeah, I mean, it's always refreshing in that sense, right?
Yeah, I mean, likewise, Romit, great talking to you. I mean, we're speaking after a good 3, 4 years. It looks like I thoroughly enjoyed the conversation, and it was great catching up with you. And hope people watching this find this useful.
So I'll just stop the recording, and then we can talk for 5 minutes if you have time, and then.
No, I have another meeting now.
Oh, okay. Then I'll just end this.